Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar was trading near the upper limit of the break level seen around 65.30.40 earlier on Thursday, and as the gains continue, all eyes remain on the US dollar as it shows some weakness after the US CPI rally. From the pullback of 104.90, the dollar index, which measures the greenback strength against a basket of 6 major currencies, is now sitting around 104.30. Given the fact there is broad divergence from the MACD and also the short term from the RSI, the market is anticipated to break higher, but we do need to clear this level of 65.30.40. That would ignite the move on towards the 60-day moving average, seen around 66 figure 30, and reassess from there. Earlier I mentioned any pullback, well, the support's seen now around the level of 64.35 to 55. The euro has managed to rally further as the dollar weakened, and along with that we got an update from the ECB President Christine Lagarde, speaking from the European Parliament Thursday, warns against early interest rate cuts, citing potential wage-driven inflation. The EU inflation is projected to decline from 6.3% to 2.7% in 2022, staying above the ECB's 2.2% target throughout 2025. So from the technicals, if we break the level of 108.15, it should move on towards 108.70.80 to 109.35 to 45. I believe the bulls are still sitting at the bottom of this line here, which is seen around 106.60.65. The dollar yen, well, it was a little bit weaker, but now picking up a little bit of ground early Friday, and now looks towards the top side resistance around 150.30. I do feel the market may actually find a bit of weakness, but presently, level around 150.60 is expected to hold, and therefore eventually see a break off this midway point, which has been rejected. So keeping an eye on that level. The MACD is weaker, and we do see the both marrying up. And I'm still holding the view that the market should have potentially fall down to 148.15.35. However, rumours are back on the market that the Japanese government may intervene following the recent data out of Japan, and therefore still keep an eye and monitor, because if we do see any possible rumour of them intervening, then we may see a strong surge to the downside as we've seen previously back in December. Sterling, well, the market survived the down challenge and didn't take out the level to support this engulfing candle at 125.45. And now for the second attempt, we can see the market staging a modest rebound. Looking towards the top side, the level comes in around 126.20.30, and I do feel we could see an extension onto 127.15.25. But technically, we still need confirmation to support that upside call, because a break of the level of 125.45 would give us a bearish move back to 124.15.20 before any bounce. Momentum returned after this doji in front of the level of 1,979.84, and currently, since the break above 2,000, now looks towards 2011.12. A break there would give further scope to the upside and look towards the region of 2036 to 38. The market needs to get confirmation though to that call, because the technicals haven't fully confirmed any bullish upward side, and therefore the break of the midway point on the RSI should give at least some confidence in the bullish move and see the rise. Wrapping up with oil, the market's trying to take out this recent bearish engulfing candle. A couple of levels to look out for. A break above 78.50.60 would negate this candle and see further gains on towards 81 to 83, which was given by the measured move from the break of this neckline on this inverse head and shoulders. But that being said, until we get the break of 78.50.60, keep an eye on this downside, because a break of 75.45 would confirm the engulfing candle and see a move down towards the region of 73.45.75. Well, that's a wrap for this week. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.